Hello again. Welcome to the third video of this series. This time we are going to analyze the evolution of the major currencies and the evolution of the US dollar against the Japanese yen. But we will also present some more developments related to an indicator that we introduced in the previous videos. This is the evolution of the indexes of each currency for the last 262 business days, that is for a time interval of 1 year. We always start here because it is from the data that we use to construct this figure that we extract all the results that we will present next. When we look to this figure, we can draw some immediate conclusions. And these conclusions are important for the context of the results that are obtained with the computational processing of this information. So the first important information is the identification of the currencies that are part of the boundary. At the top, we have the Japanese yen, the New Zealand dollar, the Canadian dollar, and in the initial phase, also the Mexican peso. The latest data shows that that in the short term, we may also have the Australian dollar. At the bottom, we find essentially the English pound. For short periods of time, we also find the US dollar and the Swiss franc. It is also important to consider the process of construction of these indicators to understand the changes that are being observed as time goes on. As the objective is to quantify the relative variations in several time intervals, the value of the indexes is considered the same in the initial instant, which changes with the advancement of the time. And to realize the importance of this, we consider the example of the British pound. Presently, it defines the lower boundary because it suffered a sharp fall at about 7 months ago. Therefore, in 5 months, this data will be excluded from this analysis. And as the decline of the English pound shows signs of stagnation, it is expected that the British pound will then have a more favorable relative position. Finally, in terms of the global balance, we identified 4 groups of securities, 2 of devaluation and 2 of valuation. These groups are presented on the right side of this figure. In terms of the most intense devaluation, we have the British pound and the Mexican peso. For those that appreciated the most, we highlight the currencies of Australia, New Zealand, and Canada. With this graphic, we go to the main theme of this video, which is to analyze the evolution of the US dollar due to the influence of Donald Trump. To do this, we consider 2 important dates. The first is October 26 of 2016, that is a few days before the presidential elections, and the other is the day of inauguration as president. We also consider the behavior of the last week. The balance of what happened since October 26 is presented in blue. In red, we have what happened since January 20, when Donald Trump took office. And in green, we have the balance of what happened during the last week. As we have already mentioned in previous videos, since October 26, the Anglo-Saxon currencies appreciated more than the others. In the same time interval, the most appreciated currencies were the Mexican peso and the Japanese yen. But the Mexican peso was the most appreciated since the inauguration. And during the week that passed, as in the previous one, the Mexican peso had the highest appreciation. On the whole, the US dollar performed modestly but positively. The long-term trend is modeled considering Brownian motions, which we characterize defining the relative rate of change of the prices and the volatility. And this figure presents these 2 parameters. In blue, we have the relative rate of change of the indexes and in orange we have the volatility. Among those that are growing the most, we have the US dollar and three other Anglo-Saxon currencies. Among those with the negative rate are the Mexican peso, the Japanese yen, and the British pound. And these are also the currencies with greater volatility. The strength indicator S was presented in the previous video. It is defined assuming that the securities accumulate and release profit potential as in a wave of energy. And it measures the earnings potential of an asset relative to the other alternatives. Ideally, we identify two phases as illustrated in this figure. We have the accumulation phase, which is followed by the release phase. But each of these phases can be divided into parts. The accumulation phase starts with the recuperation, that is, with the neutralization of potential accumulated losses. Then it follows the appreciation, that is, the accumulation of potential gains. The release phase starts with the fading subphase, that is, with the neutralization of potential accumulated gains. Then it follows the depreciation, that is, the accumulation of potential losses. The cycle presented in this figure was defined assuming an average value of the index equal to 0 and an amplitude equal to 1. In practice, these values have to be estimated and can assume very different values. And so it is important to characterize the expected behavior for the different situations that might occur. And the most important situation results from having an expected average value of the index SM other than 0. And so let's consider the case where SM is negative. If we consider SM equal to minus 0.25 for the entire spectrum of S to be covered, we have to consider the amplitude delta S of at least 1.25. And let's consider this value to compare with the previous situation where SM is 0 and the entire spectrum of S is covered. In this figure, we have the reference situation in red, and in blue, we have the situation that we want to illustrate. The behavior in this case is distinct from the reference behavior, both in the accumulation phase and in the release phase. In the accumulation phase, it takes more time in the recuperation phase than in the appreciation phase. In other words, it takes longer to neutralize potential losses than to accumulate potential gains. In the release phase, it takes less time in the fading phase than in the depreciation phase. In other words, it takes less time in the releasing of potential gains and takes more time in the accumulation of potential losses. And this will occur mainly when the long-term trend is negative. And because of this relationship, there is an important conclusion that we can underline. When the security has an average downtrend, the average value of the strength indicator will be negative, and it will be more advantageous to open short positions at high index values. In the case of SM being positive, the conclusions are the opposite. In this case, the average long-term trend will be positive and it will be more advantageous to open long positions at low index values. And now let's look in more detail to the two currencies that deserve our attention in this video, the US dollar and the Japanese yen. In this figure, we have the evolution of the index of the US dollar. And what we can identify is a strong upward trend of 9.9% and a standard deviation of 8.9%. In the short term, we can see that the index was correcting and that it is now recovering. And here we have the evolution of the Japanese yen. The long-term evolution, whose behavior is represented by the line in pink, is the inverse of the evolution of the US dollar. In this case, we have an intense decline because the yen had been at very high values. But in the short term, we have a similar behavior. The yen is below the expected value and may recover. And now we have the evolution of the pair USD JPY. We can see that in the beginning the trend was down and now it is up. With respect to short-term behavior, we can identify a correction that may continue to develop. And this is the evolution of the strength indicator. The pink lines show that the average value of this index has been increasing. At first, the average was clearly negative, and so short sale decisions would have been made at high index values and close at low values. More recently, it was better to take a long position when the index was close to -1. Entering long position can also be considered when the index is not in the ideal position. But in this case, we would need to a strategy to deal with the possibility of further devaluations. The uncertainty we detected on the short-term evolution when we analyzed the indexes of the two currencies is translated here in the projection of the evolution of the strength indicator. To signal this uncertainty, we have lower amplitude than that we can observe. In this figure, we compare the evolution of the strength indicator, which is presented in the first graphic, with the evolution of the quotes of the pair USD JPY. What we can highlight this time is the absence of clear entry opportunities in the first 6 months. The average trend of the quotes was downward, but the index only reached the values close to unit twice. Considering the analysis that we presented before, in this point we would have assumed short positions. And shortly after, we would have closed those positions with modest profits when the index reaches -1. At the beginning of the second semester, we could have identified an opportunity to enter into a long position. The index touches the lower limit and the quotes show signs of a change in trend because they do not move away from the support line. If we had entered the long position, we would only have the indication to close it near the peak of the quotations with a very high profit. And this is the end of this video. Thank you for your attention. If you like this video, don't forget to give a like and to subscribe this channel. See you next week. Best regards.